XRP and WIF Dogwifit are both drawing sharp attention from traders, but today the focus is on WIF's clear setup and XRP's potential resumed momentum. According to Ainvest, WIF has built a strong technical breakout structure, with on-chain signals lining up for a possible surge toward $4 to $5. Meanwhile, XRP is approaching key levels that may set the stage for its own rally. With technical setup, WIF is trading just under $1, showing a potential Elliott wave to pull back within a rising trajectory. A cup and handle formation sits just above, with breakout resistance placed at $1.30. Key indicators supporting a rally. It has broken above the Ichimoku cloud, signaling momentum. A surge in on-chain open interest, rising from approximately $200 million to over $600 million in futures, shows strong speculative interest. If WIF clears $1.17 and volume accelerates, traders expect a fast move toward the $4 to $5 zone. XRP. Momentum on the rise. XRP currently trades above $3, approaching a critical resistance range between $3.40 and $3.66. Analysts see this zone as the potential trigger for a broader bullish breakout. Technical patterns like cup with handle, inverse head and shoulders, and Fibonacci base setups align with a probable move toward $4 to $4.50, a target supported by Elliott wave and higher time frame volume surges. On-chain, over 310 million XRP, almost $980 million, have moved off exchanges, signaling whale accumulation and reduced selling pressure. If XRP holds support near $3 and closes above $3.40, a 60% rally toward $4.50 becomes a realistic scenario. Risk levels to watch. For WIF, a drop below $1.08 would invalidate bullish patterns and indicate bearish sentiment. For XRP, a fall below $3 would challenge the bullish wave count and invalidate the rally setup. What to keep an eye on? Volume confirmation at breakout levels is essential. Both assets need strong volume to validate moves. On-chain shifts, large whale transfers off exchanges are bullish signals for reduced selling pressure. Broader market trends, with Bitcoin dominance falling, altcoins like XRP and WIF may benefit next as capital rotates. Bottom line, WIF's technical structure is tightest, with a confirmed breakout above $1.17. Targets between $4 and $5 are eye-catching. XRP also looks poised for its own leg higher, with Fibonacci extensions and institutional move indicators targeting $4.50. Watch the key resistance and support levels carefully, and trade with volume confirmation. These are dual narratives shaping up for potential breakout weeks ahead. That's it for now on Cryptozard News Today. XRP could be heading for one of its most explosive rallies in years. Analysts are forecasting a 200% surge to $9 by September 2025, if the right conditions fall into place. Source: Finance Magnates. Key drivers behind the $9 prediction. 1. Classic fractal patterns from history. Analyst James Cryptospace suggests XRP may replicate its 2017 bull cycle pattern compressed and adjusted for today's market. If that pattern holds, price discovery toward $9 within 4 to 5 weeks is possible. Source: Finance Magnates 2. Technical setup: resistance zone breakout. XRP has been consolidating at $3.10 to $3.60, with key resistance around $3.60. A breakout above this level opens the door to Fibonacci retracement targets around $5.80 and extended targets near $6.19. Source: Finance Magnates 3. Massive whale activity and institutional interest. More than 70 million XRP moved off dormant wallets in July. Classic accumulation behavior from large holders. Futures volume from XRP has surged past Solana, signaling heightened trader confidence. Source: The Economic Times. What could send XRP to $9? A clean break and close above $3.60 resistance, confirming technical strength. Increased ETF speculation and broader institutional positioning. Continued on-chain accumulation by large wallets. Reaffirmation of Ripple's payment partnerships and regulatory clarity. Factors that could deny the rally. Failure to breach or hold above $3.60. Drawdown below support levels near to $0.96 $3. Renewed macroeconomic uncertainty or regulatory setbacks. Bottom line. If XRP breaks $3.60 with volume, history may repeat. A pattern echoing 2017, paired with strong on-chain support and institutional flows, could propel XRP toward $6 to $9 by early September. We'll continue monitoring resistance levels, whale movements, and ETF updates right here on Cryptozard News today. XRP is gaining attention not just for the short-term rally, it's the long-term picture that's making headlines. A new projection from Binance Square outlines bold price forecasts for XRP all the way to 2034. Source: Binance. XRP price predictions by year 2026. Markets expect regulatory clarity to improve. With more CBDCs launching worldwide, RippleNet's adoption could rise significantly. Ripple is already in talks with over 20 countries. If progress continues, XRP prices may range from $4.89 at the low end to $8.45 at the high, with an average around 6.67. Source: Binance, 2027. This could be a pivotal year. Ripple's escrow holdings may fully unlock, pushing XRP into a deflationary phase as transaction fees burn tokens. Forecasts show a low of $7.39, a high of $21.40, and an average near $13.48, driven by institutional adoption and clearer token supply dynamics. Source: Binance, 2028. Ripple's involvement in global CBDC rollouts and its continued utility could drive the price between $10.73 and $50.48, with a median around $25.69. Source: Binance, 2029. If Bitcoin's bull cycle continues, XRP might ride the momentum toward $110.48, with a median forecast near $46.00. A conservative floor sits at about $14.95. Source: Binance, 2030 and beyond. By 2030, global crypto infrastructure, including CBDCs, tokenization, and enterprise adoption, may help solidify XRP's role in the ecosystem. While exact numbers beyond 2030 aren't detailed, projections suggest a continued multi-currency trajectory, though volatility will likely remain. Source: Binance. What's driving these predictions? CBDC infrastructure. Ripple is working with over 20 countries on CBDC development. Regulatory clarity. Recent legal victories are increasing institutional comfort. Supply dynamics. Escrow releases could introduce deflationary pressure. Global adoption. Broader crypto growth in major economies adds to long-term demand. Risks and realities. These bullish projections hinge on favorable regulatory progress, Ripple's continued adoption, and CBDC momentum. XRP could underperform if legal issues return, demand slows, or token distribution shifts too quickly. Source: Binance. Summary: XRP's long-term roadmap is ambitious. 2026 for $0.9 to $8.5. 2027, $7.4 to $21. 2028, $10 to $50. 2029, up to $110. These projections suggest XRP could be more than just a short-term play. Whether they come true depends on regulation, execution, and adoption. Stay tuned, we'll keep covering XRP's journey through 2030 and beyond, right here on Cryptozard News today. What if XRP could follow Bitcoin's path and become the next dominant crypto? That's the bold question some investors are now asking, and here's why it has serious momentum. According to a recent feature from Yahoo Finance, Bitcoin may be hitting record highs, but many are looking for the next Bitcoin opportunity, and XRP is a candidate that's gaining attention. Source: Yahoo Finance. Why XRP draws Bitcoin comparisons. 1. Institutional exposure and ETF potential. A proposed spot XRP ETF, if approved, could bring massive capital inflows, similar to what Bitcoin and Ethereum experienced last year. Analysts expect it would attract institutional wallets, reduce exchange supply, and ignite a rally. Source: The Motley Fool. 2. Clearer regulation and U.S. strategy. XRP's legal position continues to solidify. The SEC battle has largely resolved in Ripple's favor, and XRP has gained support among pro-crypto political figures, including recognition in a proposed U.S. crypto strategic reserve alongside Bitcoin. A shift to Trump-appointed SEC leadership may also bring further regulatory clarity. Source: Wikipedia. 3. Real-world utility and corrections backbone. Unlike Bitcoin's store of value focus, XRP is embedded in Ripple's payment infrastructure. Through RippleNet and upcoming projects like the RLUSD stablecoin, XRP powers real-time cross-border transactions, positioning it more as a utility token than just a speculative asset. Source: Wikipedia. What analysts say and outlook scenarios. A recent forecast from finance magnates predicts a 200% move toward $9 by September 2025, citing chart patterns and trader sentiment. Sources: The Economic Times, The Motley Fool. Other analysts envision XRP reaching between $5 and $7 by mid-2025, especially if ETF momentum builds. Source: Google. So it's not just speculation. There's a growing case that XRP's price pattern may mimic earlier Bitcoin-style bull cycles, but adapted to its own tech ecosystem. Differences and risks that set XRP apart from Bitcoin. No capped supply. XRP has 100 billion tokens, compared to Bitcoin's 21 million. That affects scarcity-driven pricing. Centralization questions. Ripple Labs holds a large portion of XRP, and escrow releases are managed over time. Sources: Investopedia, Wikipedia. Utility over speculation. XRP is built for corporate payments, not as a store of value. This is both a strength and a limitation when it comes to mass retail investment, unless infrastructure scales accordingly. Still, XRP's integration with banking systems, CBDC initiatives, and evolving regulations make it a serious contender among altcoins. Summary: XRP as next Bitcoin. Could XRP really replace Bitcoin? Probably not. Both serve different purposes. But if you're asking which altcoin has the infrastructure, legal clarity, and technical upside to play a similar long-term role, XRP is a standout contender. Key drivers to watch: Spot XRP ETF developments, U.S. legal and regulatory direction, Ripple's enterprise partnerships, and stablecoin rollout. We'll keep tracking XRP's journey, and you can count on us to bring the updates. That's all for today from Cryptozard News Today. If you're wondering whether Solana Sol or Ripple's XRP makes a stronger long-term bet, Forbes has laid out a detailed analysis comparing the two, and the verdict is nuanced. Number 1. Technology and use cases. XRP powers fast, ultra-low-cost cross-border payments through the XRP ledger XRPL, which settles transactions in about 3 to 5 seconds at just $0.000 per transaction. This makes it appealing to banks and payment providers. Solana, built on proof of history and proof of stake, handles massive throughput up to around 65,000 transactions per second and operates with minimal fees. This supports a growing ecosystem of DeFi apps, meme coins, NFTs, and Web3 projects. Number 2. Market position and growth potential. XRP boasts a large market cap around $170 to $180 billion, more than double Solana's at $90 billion, meaning new capital has less price impact. Solana, though smaller in market cap, has shown explosive growth and now drives revenue through DeFi and developer usage. Analysts forecast Sol reaching around $300 by 2025, while XRP may hit $5 in the same time frame. Number 3. Regulatory and institutional landscape. XRP benefits from legal clarity. A pivotal court ruling in 2023 determined XRP wasn't a security. And in March 2025, XRP was named in a proposed U.S. strategic crypto reserve plan by the Trump administration, boosting institutional confidence. Solana, while popular, faces ongoing regulatory scrutiny. SEC lawsuits and concerns about token classification continue to weigh on investor sentiment. Number 4. Risks to consider. XRP's token distribution is heavily controlled via escrow by Ripple Labs, raising concerns about centralization. Solana has suffered several network outages and occasional security issues, raising questions about its long-term reliability despite its speed. Broad macro volatility could affect both, but Solana's younger ecosystem carries more execution and technical risk. Number 5. Long-term investment edge. XRP may be best suited for investors prioritizing real-world utility, regulatory clarity, and adoption by institutions. Solana offers major upside for those looking to ride app-driven growth, developer expansion, and high-speed infrastructure. Summary at a glance. Feature: XRP, Solana Sol. Market cap: $170 billion larger, $90 billion. Use case: cross-border payments, dApps, NFTs, DeFi, high throughput, fast 3 to 5 seconds, ultra-low cost to very fast tens of thousands TPS, low fees. Regulatory status: legal clarity, pro-institutional, some SEC uncertainty, still developing. Risks: escrow centralization, slow DeFi growth, outages, security, and scalability concerns. Final take: there's no one-size-fits-all answer. XRP stands out for financial infrastructure and institutional use backed by legal clarity and real-world adoption. Solana, meanwhile, risks more, but also offers potentially higher returns if its ecosystem keeps exploding. Ultimately, building a balanced portfolio could mean combining both XRP for stability and payments utility, Solana for developer-driven growth. We'll continue monitoring XRP's legal updates, Solana's network resilience, and key ETF movements right here on Cryptozard News Today. The inventor of Bitcoin isn't a celebrity or CEO. They vanished over a decade ago, yet their pseudonym still echoes through every crypto conversation. That name: Satoshi Nakamoto. According to 99 Bitcoins, Satoshi Nakamoto is the anonymous author of the 2008 Bitcoin white paper titled Bitcoin, a peer-to-peer electronic cash system. They launched the Bitcoin network in early 2009 before stepping away completely by 2011. What we know: Satoshi's identity has never been revealed. No photo, no social profile, no verification. They only communicated through encrypted emails and early forums. Believed to control about 1 million BTC, now worth tens of billions. None of it has ever been spent. They disappeared in late 2010 and handed off Bitcoin development to others, including Gavin Andresen. Top contenders and theories. Suspect summary: Dorian Nakamoto, named by Newsweek in 2014, denied it. Most experts dismiss the claim. Nick Szabo created BitGold, a precursor to Bitcoin. Often mentioned, but denies being Satoshi. Craig Wright publicly claimed to be Satoshi. Courts ruled his evidence was fake in 2024. Peter Todd, named in a 2024 HBO doc. He denied everything, calling the claim baseless. Still, no one has ever confirmed who Satoshi really is. Why the mystery matters: Satoshi's anonymity became part of Bitcoin's myth. It reinforced decentralization and trustlessness. No founder, no central figure, just code, community, and consensus. This helped shape Bitcoin as a currency without borders, bosses, or bias. What if Satoshi returns? If Satoshi ever moved any of their BTC, the markets would explode. Some believe companies like Kraken might hold identity data from old crypto exchanges. But so far, no proof. Just rumors and rabbit holes. Final thoughts: Satoshi Nakamoto never sought fame, and their silence fuels the legend. They wrote in both British and American English, used advanced cryptography, could be a genius or a group. The truth, we may never know. And that's part of Bitcoin's story. Money without middlemen. A system without a face. We'll keep tracking updates right here on Cryptozard News Today. Source: based on the article from 99 Bitcoins. Who is Satoshi Nakamoto? As of July 29, 2025. Ethereum is looking toward 2030, and long-term forecasts are swinging from modest to optimistic. Recent projections place it anywhere between $5,800 and nearly $47,000 by 2030, depending on adoption, upgrades, and institutional demand. Key forecast bands: conservative baseline. Surveys project Ethereum may trade in the range of $5,800 to $6,350 by 2030 under slower growth scenarios. Growth scenarios. More bullish forecasts see ETH climbing toward $10,000 to $15,000, driven by ETF flows, staking growth, and network upgrades. High-end projections. Aggressive estimations suggest ETH could push as high as $18,000 or even beyond $40,000 if usage scales globally. 3 key drivers for Ethereum's 2030 outlook. 1. Staking and supply constraints. Roughly 30% of ETH is already staked, and another 10% is locked in contracts, effectively reducing available supply. With ETF inflows coming, some analysts point to a magnified price impact per dollar invested compared to Bitcoin. 2 TF momentum and institutional capital. As spot Ethereum ETFs gain traction, even moderate inflows could drive ETH toward $8,000 and beyond. Some models, like those from Vonek and Digital Coinpress, stretch predictions toward $16,000 to $18,000 by 2030. 3. Ethereum's technical evolution. Upgrades like sharding, EIP for 1844 proto-danksharding, and the upcoming Pectra upgrading to boost scalability and lower fees. These improvements could enable mainstream app use and sustain DeFi and NFT growth. Macro headwinds, regulatory setbacks, interest rate shifts, or crypto bans could undermine even the strongest forecasts. Competitive pressure. Emerging Layer 1 platforms like Solana and Cardano and Layer 2 networks still threaten Ethereum's dominance. Execution risk. Scaling upgrades have been delayed in the past. Safely reaching major milestones by 2030 is crucial for large targets. What this means for you. These forecasts are projections, not guarantees. Investing in ETH with a $5,000 price target is quite conservative, while planning around $18,000 to $40,000 assumes major adoption tailwinds and technical success. Short-term traders may focus on support and resistance levels below $4,000. But long-term holders could consider dollar cost averaging if they believe in the ETH roadmap. Bottom line. Ethereum's 2030 outlook spans from $5,800 to $40,000 plus, shaped by staking trends, ETF capital, and infrastructure upgrades. Conservative estimates anchor the timeline at modest gains, while bullish cases rely on accelerated adoption and modernization. We'll keep monitoring upgrade rollouts, ETF traction, staking data, and macro conditions right here on Cryptozard News Today.